You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim. Pleasure to be here.
What do you think the short-term outlook is for oil right now? You told me everybody's waiting to see what the Fed's going to do on Thursday. How much is that going to have an influence on the price of oil?
Yeah, depending what kind of news rolls out with the Fed, I think we're going to, crude oil is a little kind of disconnected from that. Most of the focus right now with the Fed is kind of looking towards bonds and equity prices. But if we take a look at crude oil and we look at the technical charts and what's happened in just the last about almost a month in crude oil, we've seen a very strong rally, a three-day extremely strong high volume rally to the upside, and price has just been consolidating in this little pennant formation, and that's a very bullish pattern, and it's pointing to higher prices. And I think when the Fed speaks on Thursday and Friday here, I think what we're going to start to see is we're going to see all these positions start to unwind. Crude oil is pointing to higher prices. I think we're going to see that pop and explode to the upside. And it's going to be interesting to see what happens to equities, but they're set up a little bit different. But overall, crude oil on a short-term basis is looking very bullish, looking forward several weeks to a month here.
Now, traditionally, doesn't crude go down in the fall because there's less driving?
Yeah, we usually see a little bit of weakness, but we have seen so much weakness this year, and we just got off pretty much from all of July, or you could argue actually June to just a couple of weeks ago. We've seen crude oil completely lose. It went from $63, $64 a barrel all the way down to $38 a barrel. So I think a lot of that kind of downside has kind of really been unwound already, and it's been flushed out of the market. And now we're getting at a point where, the crude oil itself is kind of setting up with a nice bullish pattern here. And, it might flatline. I think the last time we spoke, talking about how crude oil is probably going to flounder down here for a while in a fairly big range between, $43 per barrel up to around the $50 per barrel mark. It's going to probably be stuck in that range.
Now, what does that mean for the average investor? Do you still hold off and don't buy any, or do you think this is as low as it's going to go?
Well, it depends what trade if you're talking about crude oil, the average investor really doesn't invest directly in oil too much. They're more or less heavily weighted in energy stocks. And the last time we spoke, we were kind of talking about how we've now technically entered the U.S. market here, and even the Canadian market, a bear market. We've had a technical breakdown. Ideally, you don't really want to be holding, equities in general in the long term here. We might see a short-term pop here with the Fed news coming out in a couple of days in oil and energy stocks and stocks in general, but overall, you don't really want to be holding it. That being said, now that we're just getting into this bear market, we usually see commodities start to firm up and actually outperform the rest of the market. So we're probably going to start to see crude oil, we're going to see gold, silver, commodities in general start to lift and rise. And that's because people move from the equities, the risk on trade, and they go to more physical assets, something that's actually tangible. And we see this over and over again in the late stages of a bull market, which we are just exited. We usually start to see commodities firm up. And of course, we had that big bout of selling in August. And what happened? We saw crude oil rally. We saw gold rally, silver rallied, gold miners rallied. So when the market here, the equities market and the U.S. market rolls over, we're going to see money start to flow into these commodities. So in the long run, I like the commodities a bit more if you're just going to be bullish. But overall, long run, you don't really want to be holding equities, in my opinion.
Are you worried that we're going to see a sudden flood of oil from Iran?
We could, yeah. They're talking about their increasing production, but we've heard that story so much that there's so much oil out there, and they're increasing production. It's kind of just the same thing going around. And you know what? If that's the case, it's probably why we've seen this huge sell-off in crude oil in the last 3 months, and it's probably the big money has probably saw all this coming, and they've kind of sold the price down. And it's probably already been priced into the market. Typically, when you hear the news, it's already been priced in, and usually it happens days or months before it actually becomes public knowledge. So I have a feeling this whole big supply has already been kind of flushed out of the market, and we're trading at pretty much fair market value for crude right here.
The Saudis keep saying that U.S. shale oil has reached its peak and its production is going to fall. Is that the truth?
It seems like it. It seems like they're having some serious problems, and that could be, if that's the case, well, that's good for higher oil prices down the road. We'll be able to see that probably get worked back up, and I wouldn't be surprised if we get back up to that $78 per barrel mark, in the next 6 months or so for crude oil. I think we could see a pretty strong recovery in oil.
We'll have more with Chris Vermeulen right after this.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon and Garfunkel in Oliver, October 2nd, in Kelowna, October 3rd. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Chris Vermeulen. His website is thegoldanoilguy.com. Chris, what's going to happen with gold? I've noticed the price has dropped slightly lately. Is that because China has been selling off massive amounts of gold to try to prop up its stock market?
That's a good question. It's very likely it could be. We've seen huge pressure in gold. We've seen these massive rallies followed by even larger sell-offs in precious metals, especially gold, for the last couple of years. And of course, that bout of selling in the equities market back in late August, that triggered a big rally in gold. Gold actually started to move up before that sell-off happened in equities. And then when the sell-off took place, we saw gold jump right up. Overall, though, gold and silver are still clearly in a downtrend. And whenever we do get a bounce in price, we always have seen sellers step right back in and pull the price right back down. So overall, it's just the overall bias for precious metals is when there's a bounce, investors decide to get out, and they sell price right back down. It has been seen as a safe haven. With that big sell-off that we had in August there, money did flow right back into precious metals. It's kind of one of the only safe, real safe places to store value. There's so many talks and so many people are paranoid about what could happen with the U.S. financial system. Do you really want to go into bonds? Do you really want to keep your money in the bank account when, there could be a bail-in where you end up paying, you end up losing money in the bank, or the bank goes under and you lose all your money. So, when you start to look at it, you kind of got to wonder, well, what is a safe store of value? And that's what gold and silver, I think, are going to start to be more seen. I think the general public hasn't really clued into all the threats and potential risks with just having your money in a U.S. bank at this point. And when they start to catch on that, you might be better in physical assets like gold and silver for now until we see how this financial crisis is going to unwind. That is going to be the huge spur in gold and silver prices. And, we just need, I think, a couple big events here to kind of spark that and get it into the average investor's mind. And we're going to see precious metals explode in value. But that might not happen still for several more months. And we're going to need a bit more of a financial crisis to take place for this to get into the mindset of the average investors that, I'm going to take that $100,000 out of my bank account and I'm going to go invest it in some gold and silver and store it outside of the banks in a third-party vault somewhere, so that if, everything does crumble, and say real estate value collapses, banks start to go under, gold and silver should likely skyrocket and compensate for any losses you've had anywhere else. And of course, you've got to protect it in a physical location, and it's not tied into the banks and in the grasp of the governments. And
would now not be a bad time to accumulate gold, considering the price is quite low?
I think it's a great time to start accumulating gold. Gold and silver are getting down to some very fair values. We're finally at some critical turning points in the market here that we've seen, multi-year bear market. We're down at some prices where, it costs the same amount to pretty much get gold and silver out of the ground. So, we're at that sweet spot. And the only problem is we're not seeing investment capital move into the precious metals sector yet. And usually we'll see that with gold miners and silver miner stocks. We'll see money rotate into those first, and we're not seeing any money move into those sectors. In fact, gold miners and silver miners are still underperforming gold, And that's a very bearish sign. It means there's lower prices for gold. I wouldn't be surprised if in the next day or two here we see gold drop another $20, test the recent lows from July and August, all the way down to the $1,080 level in U.S. dollars. And I wouldn't be surprised we see silver here make a new low and drop substantially lower on a percentage basis than gold. So, it's a real struggle. I think it's time to start accumulating some. I don't think you should be getting a lot yet. I think we're going to get a nice washout low here, probably with the Fed. I'm kind of leaning towards we're going to see the Fed's going to come out with news that's going to spike the equities market. Gold and silver are going to tank, and it's only going to last a few days. It's going to be just a high emotion kind of type trade and unwinding of big hedge funds and big positions getting unwound around these positions. And then we're going to see the markets roll right over. We'll see gold and silver bottom. We'll see equities hit resistance and top. And I think it'll be the start of something much bigger, the big bear market in equities and the bull market in precious metals.
Chris, anything else you wanted to add today?
Other than that, I think one interesting point that I had a subscriber email me the other day, and he was talking about a pretty interesting scenario that we could start to see when we see the equities market in the U.S. market roll over here. They were talking about how we could see huge money come out of equities, and all that money starts going in and buying U.S. bonds, starts soaking up and actually creating a real market for bonds again. And if we do get a rate hike, or they firm up the price a little bit, the rate this coming week, it could be a really interesting scenario because I think we could see equities roll over. We could see bond yields potentially kind of rise, and we're going to see bond prices, I think, hold up fairly well if that's the case. And it's going to be really interesting. I won't go into the details, but I think going forward here, we got a bullish case where we could see bonds and equities here actually have quite a strong pop later this week. It'll be followed by strong selling probably a couple weeks later, but short term, I think I'm a little more bullish here to the upside.
Chris, thanks a lot for chatting with us.
Hey, thanks for having me, Jim. Appreciate it.
My guest has been Chris Vermeulen. His website is thegoldanoilguy.com. You're listening to HowStreet.com radio. Find us on YouTube at Talk Digital Network. On Twitter, we're Talk Digital Net. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.